Hello. The company being analyzed today is Macpower CNC Machines Limited. This is a company whose share price has seen a 874% increase over the last 5 years, though last 2-3 years have been stagnant. This company is a 929 crore market cap company. Current price of one share is 928 rupees. Price to earnings ratio of 28.2 times. Book value per share of 155 rupees. Book value is the net asset value. Here are the historical financials of the company. Here you can see 23% CAGR growth in revenue from fiscal year 21. Okay, generating 112 crores of revenue in fiscal year 21 all the way to 261.8 crores in revenue in fiscal year 25. EBITDA has grown by 46% from 9.1 crores in fiscal year 21 to 41.5 crores in fiscal year 25. Incredible growth in EBITDA margin also from 11% to 15%, 45% CAGR in profit after tax. We will take a look at the adjusted profit after tax. It's adjusted for any exceptional gain or loss according to the company. From 6.3 crores in fiscal year 2021 all the way to 26.6 crores of profit after tax in fiscal year 25, the profit after tax margin has also grown a lot. So, what does the company actually do? Company profile. Established in 2003, Macpower CNC machines is engaged in the manufacturing of computerized, numerically controlled machines. So these are manufacturing tools that can drill and do other functions in like manufacturing, and they have coded instructions. So instructions on what to do, what to drill, okay, in what shape to cut, they are numerically coded inside them. Okay. The company manufactures 27 different series and product segments, okay, and has installed 12,887 plus installations till date. These many machines it has installed in total, cumulative. Okay, the company today has a capacity to manufacture 2,500 machines per annum. So remember, 2,500 machines per annum, and till date it has installed 12,800 something machines per, like, overall. Overall, here are their network. Okay, they got 7 branch offices, 8 tech centers. Okay, these many they have installed 3,000 plus application solutions. Here you can see the production unit is here, and the sales and service are spread in many places throughout India. We got in the west coast, we got somewhere in the northwestern side. Okay, they got 225 sales and service qualified engineers. So they're not spread all over India, but they're spread in quite a few regions, it seems like. Now, key products at a glance. So I don't know the technical details of what the products do, but what we can take a lesson from is, first of all, the wide variety. And second, look at the user segments. What is the use for? It's written automobiles, agriculture. Okay, let me read, railways, marines, general equipment. This this product alone, turning center. If you go here again, automobile, defense, aerospace, general engineering. Again, turn or mill product. Again, used in medical instruments, aerospace, defense, construction equipment, general engineering, hardware industry, the VX300 Super with automation. So a bunch of products, and you can see the wide variety of industries, all the way from agriculture, general engineering, hardware, okay, medical instruments, pulps and valves. Did I say agriculture? Yes, automobiles, defense, aerospace, etc. So these are the key products. Then they're also developing more and more products. So these are some more products which are developed in the recent past. So you can see they keep introducing more and more products. And here's some product development in Q3 fiscal year 26 alone. The names are Tom 200Y axis used in rolling mills, defense, general engineering, GX 100 Super used in agriculture, automobiles, general engineering, brass part, and DCM 4422. So they're still developing new products, and they have proven they can keep introducing new products. Then, user industry and clientele at a glance. You got auto companies, defense clients, die-mold sector clients, agriculture clients, government PSUs, even the education center, and engineering and capital goods clients. So vast variety of industries are being catered. Then the road ahead, 2026 to 2030. This is the big one. The companies is aiming to expand its total capacity to 10,000 machines, from 2,500 machines right now to 10,000 machines. In year one, in year one, they're going to expand a total capacity to 5,000 machines, and by year five, they're going to expand it to 10,000 machines. This is a 5-year plan of the company. 100 crores capex will be needed for installing the first 2,000 machines. And in the next 5 years, then revenue potential from this new facility expansion will be 3 to 4 times X. Revenue can 3x to 4x over the next 5 years. It is still a very good growth rate. And then they will also expand their EBITDA margin. Okay, the operating leverage, meaning a lot of fixed costs will be there in like the early plant, early part of establishing the factory. But then as they keep expanding the volumes, the fixed cost will be there. The variable cost will be not that much, as much as revenue growth, and margin will expand. Then they are going looking at global joint ventures to push exports and defense and aerospace focus. 50% of the new plant will be reserved for defense work, okay, defense machine. Therefore, there will be higher average selling price machines and long cycle visibility. So average realization per product will increase too, and there's a big focus on defense. That's a key insight. They're focusing more on defense. And some examples, okay, they've already supplied 200 plus machines to 35 factories of defense. Okay, you can pause and read. They have supplied machines for T-90 battle tank parts, and they have already signed an MOU, a momentum of understanding. I forgot what the M means, but MOU for defense and aerospace, and they already have bids of 319 crores worth of projects. They're already bidding for these many crores of projects. They've already supplied machines for defense, and they're looking to focus more of their business on defense, which is a higher margin product. Then, some of the competitive advantages. One, lowest cost producer. Among all of its peers, Macpower is the lowest cost producer, generating amongst the highest EBITDA and PAT margin in the industry, some of the highest. Then, their return equity and return capital employed is some among the highest among the peers, and is supported by their working capital efficiency also. They have zero debt, one of the few net debt negative companies in the sector. Net debt is negative. Net debt means total debt minus cash and cash equivalents. So cash and cash equivalents is more than total debt. So the net debt is negative, and they have zero debt. They claim. They have a high asset turnover. The asset turnover for the group is currently stands at 3x and can go up to 5x in the current plant, one of the highest among its peers. So in its industry, it's one of the lowest cost producers, one of the best returns on its capital, one of the highest asset turnovers, meaning for every 1 rupee of capex for making an asset, they can get 3 rupees from that asset. And finally, they are making a wide variety of products. Yes. Looking at its con-call analysis, the company has total bids, that is projects it is currently bidding for, about to bid for 958 crores. It is expecting 25 to 30% revenue growth for fiscal year 27, and like a similar growth range for fiscal year 26. So it's looking at a good growth rate, a very nice growth rate in the near term. It's targeting a 25% EBITDA margin in the next 2 to 3 years. 25% EBITDA margin. Right now it's close to 18, right? Including other income. So going from 18% EBITDA margin, 25% EBITDA margin, while targeting 25-30% revenue growth. So as revenue growth is good, the EBITDA margin over the next few years is going to expand rapidly. EBITDA growth should be phenomenal. And they're going to achieve this through operating leverage, which we already covered, high margin products like defense, and backward integration. So going back in the supply chain, producing some of their own components they use and capture that margin of the suppliers who supplied them the previous components. So let us see how Macpower CNC machines does in the future.